Hey there, thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for ROI, payout, no trade recommendations because it's just my trade journal. We're going to talk about weekend trade preparations for Monday, April 17th, 2023. Liquidity pools, imbalance, balance, consolidation, displacement, and most importantly, time of day, because time is the first ingredient of how price delivers. So let's get right to it. I start with the baseline 5 for the weekend research and study because despite what everything says on the headlines, you've got to pay attention to these 5 elements, in my opinion. The yield curve on the 2 year, so rates are above 4% again. At the close of Friday, we had 4.099. 10-year Treasury 3.515. Again, inverted yield curve not going away. And again, the short-term rates over 4. Crude oil, this is a big one, 82.68 a barrel. So that's not helping on the inflation side. Definitely people heard that inflation's lower, but how does that work when oil's 82.68 a barrel? And dollar index is down at 101.58. But here's the biggie, VIX. Volatility measures dropped 4% Friday, the lowest it's been since early 2022. So I can't see a bigger complacency reading than this. You got to let this sink in and understand before looking at the index futures charts, and that's what I'm doing here on the journal. All right, let's get to the equity S&P 500 micro futures charts. Here we are, weekly chart. We've got 3 candles, 3 weeks. And remember, the end of March, we had the largest green candle of the year right here, okay? And then we measure out the second week, still green. And then the third week, we just finished right here. So what do we glean from this? The market is in a premium discount array with the mid coming in right here on this yellow rectangle. And you can see here the last 2 weeks we haven't been able to touch this area at all. And this green on the right shows again we are in a premium, and we closed at the upper level. You can see here the close right here at 41.71 and change. 50% of this candle wick, this is a level, 4180.5, 4180.5. And below on this doji type bar, the 50% wick below, 119 candle wick below. So on the weekly, again, premium, these are my levels. We could easily hit the ones above and still trend up. We've got earnings coming out, and this could definitely go on where we keep green all the way into May, early May, before we change direction here. So I'm not expecting any kind of a crash, but I want to algorithmically decide here if we have a meaningful or even mild retracement. That's how I trade. I'm hunting for retracements and imbalances. So these are why I do the wicks. Next chart. 24-hour chart. Let's get to it. So the first thing I want to note is we closed with a sell signal. So the algo sell signal right here with a delta of 18. That is something to note. And the weekly I showed, that had a sell signal also, but I'm paying more attention here to the 24-hour. So this level here, previous week high, is a draw on liquidity. So liquidity pool right here, and that comes in at 89.25. And above that, you go all the way to the left, and what I've got on this yellow circle is February 15th and 16th. So this is like an order block right here that I'm looking at, and there's a liquidity pool right there. And so that's just really a few points away. So I think this could easily be hit next week. So I'm going to be ready for that. So on the daily chart, the wick 50%, 4180.25. And then below, we've got the opens. So the 14th, the 12th, and then the 50% wick of last week's Friday. That is 41.5375. So again, mild retracement target, that's a priority, is 41.50 if we were going to have one Monday or Tuesday. I'm looking at that. And then way below here, we've got this weekly fair value gap that I pointed out in the previous video. And you can see price just doesn't want to go there. And then this long bar, which is one of the largest bars of the year, on the daily, March 31st, 50% of the equilibrium is right here, and that is 4110.25. So that is an ultimate draw on liquidity level and low for the last several days, but we'll have to see if we get price to retrace lower. I think 41.53 is a lot more doable here early in the week. All right, next chart. 4-hour chart. So the only thing I really want to point out here is this large fair value gap. I can't remember a larger fair value gap on the 4-hour chart in recent weeks. This is really big. And what we had last week at the end of the week was it was created, price Friday, shot above it, and then we have this big bar that comes back down all the way and rebalance. So imbalance, green bar, black bar down, rebalance, the whole thing, the whole range. Notice down here the strength of the hits on the order flow also is no longer bullish. So that's how we close the 4-hour. So we're in balance on this zone. That is the takeaway, okay? There is no more imbalance on that, but I'm going to still keep it on the charts for another day or two just to watch and see. Like I said, on the daily chart, I'm still interested in that retrace on the 41.50-ish level, and that comes back at that 50% level of this fair value gap. So that's why I'm keeping it on the chart on the 4-hour. Next chart. There's a lot of people that criticize the Renko chart, but for me, I've still kept one of these older charts as a current study because it really helps me. So going into Monday, what I'm thinking is, here we go again. Where did we close the week? We closed in the neighborhood zip code of Upper Blue Keltner. Here's the red, 41.53. We talked about that. That is a zone, and that's only the mid. And so the blue seems like miles away. It's not even on this chart. And the upper is 76, 41.76. So again, where are we? Navigationally, we are in a premium, and on the Keltner upper, premium at the close. So again, with that VIX at a low for over 12 months, that's just where we're at, and I think that I am not going to go long for a very long time here. My bias is going to be for retracements. Again, not a bear, but retracements lower, setups that set that up. We're in a premium array, so that's how I'm going to play it for next week. And if I have to wait and not trade too much and wait for that perfect pitch, that fat pitch, that's what I'm going to do. Have a great weekend. Take care. Aloha. Bye.